do watch out for this one. Okay, sticking to corporates, before we talk about money markets, and ILFS Transportation Networks came out with results. Sales up 25%, but the PAT was down 30%. This is because I think EBITDA margins shrank considerably from 41% to 35%. So Ramchand Karunakaran, MD of ILFS Transportation Networks, joins us right now on the show to speak about the numbers and the outlook. Good having you, Mr. Karunakaran. Thanks for joining in. Let me start off with the positives, the revenues, which have done well. So tell me, what are the major projects that contributed towards the revenue growth?
Yeah, actually, it's a mix of the toll and annuity collections that we do, plus the construction margins that we have built up over time. And the third contributor was the LSMX, or the international operations. Broadly, I would say that the construction, including the fee income, would be a fairly big chunk of this whole business revenue growth, followed by toll and annuity, and then followed by the international contribution.
So let's talk about your profits then that have fallen sharply on back of higher expenses. How do you see material costs going ahead?
I think we need to break this profit into two parts. Okay, if you look at the PBT level, which is the operating income probably of the company during the half year, and let's leave aside quarter to quarter for a minute. If you look at what we did in the half year, at the PBT level, we are actually better than last year. You have to consider that last year we had a one-time gain from a sale of asset, and that can happen during a business cycle at any point of time. It so happened that in the last year it happened in quarter one, and therefore it had an impact on the half-yearly performance. But if you look at the half-yearly performance at the PBT level, we have done better than last year. The second contributing factor besides the one-time gain is that we keep provisioning for probable issues that may arise with projects. So this year we've also done some provisioning for previous years which we did not do. So there's about 70 odd crores of provisioning that we did at the standalone level and about 25 crores at the console level. Now, if you actually take this out, which actually are one-time hits which a company needs to take, both of the revenue as well as the expense side, we have actually done better than the previous year. So, because revenue also grew, cost of material also grew, I think the biggest impact on expenses continues to be interest, which we have all been waiting for a sharper fall in interest rates than what has happened, but we continue to wait for it to happen.
The exchange release talks about sale, transfer, divestment of investments in certain projects or SPVs or JVs as well. Can you give us some clarity here?
Yeah, actually what has happened is that last time, we are just making two enabling provisions that we are looking at. One is, of course, I think we have said that we want to raise additional debt in the books, and therefore that's because the last time the allowance that was given to us by the shareholders had lapsed. The second thing is that we will continue to look at there are possibilities of sale of assets that we did last time, because we sold a minority share in the Gujarat road projects, and that will continue to be there. So as projects mature, I think one of the ways of raising capital that we will look at is to actually look at divestment of part or full portfolios within our books. And while we can't disclose if we have anything online immediately, but it's an enabling provision that will allow us to go ahead.
So before we let you go, if you can tell us, how much are you looking to raise via selling stakes?
We haven't got any firm offers, or we haven't even gone through that process fully. So I think it's early days to discuss how much we will get and what we plan to do with that affair.
Okay, sir, we leave it at that. Thanks so much for taking the time out and joining us. Need to slip into a quick break. The market's down about 1%. Come back with more market updates.